an individual with no entity. Because a lot of people say, yeah, I'll just do this for a while till I get some money, and then when I have enough money, I'll set up an entity. Okay, well, here's the problem. Every time you sign your name on a contract individually, you could be liable for 3 to 6 years, depending on your state statute of limitations for breach of contract. So you can do a deal now, screw it up, and get sued 3 years later. That's one good reason not to do it in your own name. The other reason is, if you buy property, and you take title, and you rent it for a couple of years and sell it, that's what's called a capital asset, because you held it for a while. Okay, long term if it's more than a year. Short term if it's less than a year. If you acquire properties and then flip them, probably the IRS, and especially if you're wholesaling them, because that's clearly an intent to get in and get out, the IRS is going to tag you as what's called a dealer in properties. What does that mean? Well, as an individual, you're reporting these flips, wholesales, fix and flips, whatever, you're reporting them on Schedule D of your 1040, your personal tax return, and that's called short-term capital gain. So if you acquire title to a property and then resell it, it's not long-term, it's not a year, so you're going to try to pass it off as short-term. Now the tax rate is the regular personal tax rate. It's not like a long-term capital gain, which is capped at 20%. It's going to be personal rates, which is as high as almost 40. And if you're making enough, pay Obamacare tax, state tax, everything can be as high as 50. Okay? If the IRS says you're a dealer in properties, that means this is not a capital asset. It is inventory. What does that mean? Well, inventory has a different meaning than capital asset. Inventory would go on a Schedule C business. So they're going to take your buy and holds that you're calling short-term capital gains and put it on your Schedule C as a business and call your real estate inventory. What that means is, on Schedule C, you pay the same personal income tax, but what do you also pay when you have a Schedule C sole proprietor business? Think about it. And many of you have had one. You probably guessed right. And that is self-employment tax. And that is 15.3% of your earnings there. Okay? So if you did 100 grand worth of flips on a Schedule D and then you got tagged a dealer, they moved it to Schedule C, and you did that for 3 years, 100 grand a year for 3 years, you would owe 15.3% of 100 grand. Wow, that's a hit. That's like almost 50 grand plus interest. That's a big hit you want to avoid. Plus, if you're a dealer, you can't exchange, you can't do, if you carry back a note on the flip, you can't do an installment sale. There's a lot of negatives of being a dealer, okay? So as an individual, you want to avoid, and wholesaling is, if you do a contract assignment as we talk about, clearly, if you buy and flip it, it's dealer property, but assignment fees, if you don't even close on it, is clearly ordinary income, which goes on Schedule C. So what we're trying to do is avoid that self-employment tax. We're trying to avoid that dealer implication, and the way we do that is by putting it on an S corporation return, okay? So you are the shareholder, okay? And now you earn money from wholesaling in the S corp. Now, for those of you who don't know, an S corporation files a tax return, but it doesn't pay any corporate tax. That's a C corp return. What it does is it files a return, and then each shareholder gets what's called a K1. What's a K1? Well, if the corporation had income from flipping of 100 grand and expenses of 50 grand with a net 50 profit, then you as the shareholder would get a form K1 from the corporation, which goes to the IRS as well, saying you made 50 grand. And then you report that 50 grand on your personal tax return, not Schedule C, okay? Schedule E, which you don't pay FICA tax on. You don't pay self-employment tax on. Wow. So you could save yourself thousands and thousands of dollars by using an S corporation if you have that short-term ordinary income, dealer income, whatever you want to call it, assignment fee income that is earned. Earned income is subject to FICA tax, and rental income is not. Okay, or passive income is not. Capital gains long-term is not. But short-term stuff and wholesaling fees are. That's why we want to use an S corporation. Now, accountants will tell you that if you do this forever, by the way, the IRS is going to say, wait a minute, Mr. Shareholder, is anybody working here? Are you an officer? Shouldn't you be getting a salary? And with a salary comes what? Well, we don't call it self-employment tax, but it's FICA tax, that 15.3% that comes out, okay? So at some point you may take some small salary and pay some FICA tax, and then let the rest pass through on the K-1 without it. So I'll leave that to you and your accountant, but just generally speaking, the type of income that you earn in wholesaling should be on an S corporation return, not an individual. Now, let's go to the LLC. A lot of people set up LLCs. They figure that's the right thing to do because that's what everybody else does. You know, following the herd can get you slaughtered. So let's look at an LLC. So if you set up an LLC and you're not the shareholder, you're what's called the member, the owner. Okay, it has members. I'll say it's you and your wife, or just you, whatever. An LLC doesn't file a tax return, per se. There's no such tax return called LLC. Corporations have tax returns. There's a C corporation return, S corporation return. LLCs don't have a tax designation. By default, they are treated one of four ways by the IRS, and you can also elect to change that classification. So for example, if it's an LLC which has one member, then it is what's called disregarded. I can't spell. Regarded. What does that mean? So by default, a single member LLC, if that's what you set up, means that at the state level, this LLC exists, and it'll protect you from liabilities. But according to the IRS, that doesn't exist. It's disregarded. What does disregarded mean? That means the taxpayer from this income that comes in and out of this LLC is reported on the member's personal return. And if that personal person is you, ergo, you're reporting back on Schedule C again. Does that make sense? So the single member LLC that's disregarded is a bad form. It's just same thing. I mean, it's less liability than sole proprietor, but the same tax snafu of being a dealer. Okay? Now, if you are two members, you and a partner that's not your spouse, spouses can be also disregarded, but if you have a second member, then by default you're a partnership. Now a partnership, like an S-Corp, files a return, and each member is going to get a K-1, like an S-Corp, with their share of income, net income. And depending on whether that income is earned or is passive, like rental, will determine whether or not that income is subject to FICA tax. So the partnership doesn't avoid the dealer. If you have a partnership and you're doing dealer activity, you're going to get hit with the same problem being a dealer. Okay? So if you are an LLC, whether it's you and your spouse, you and a partner, you can elect and say, I don't want the default classification. I don't want to be a single member disregarded, and I don't want to be a partnership. I want to be an S corporation for tax purposes, IRS. Treat us like an S corp. Now, you're still an LLC under state law. You still operate with members and managers and operating agreements, but you file with the IRS an S corporation return, and you are treated like an S corporation for tax purposes. Does that make sense? So again, you could be an S corp or an LLC filing as an S corporation. It doesn't matter. It's the same thing. But that, I think, is the best format for wholesaling, especially when you're getting started. If you're making a whole lot of money where you can't spend it all, you might go C corporation in the future. I'll leave that up to you and your accountant. But for most people, either an S corporation or an LLC filing as an S corporation. There's 6 of one, half dozen of the other. But generally, the best format for wholesaling type income.